All right, guys, good afternoon. Welcome aboard to the aftermarket recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thanks so much for taking time out of your day to join me this afternoon. It is 5 p.m. Eastern Standard Time. Well, 5:05 Eastern Standard Time. Let's go and get started. Dow fell 326 points, NASDAQ down 3%, S&P down 1.65%, the VIX down 1%. How's that? Equal weight S&P down about 1.29%, did better than the other index, the SPY, because of the tech names, obviously. Dollar index crept up a little higher, nothing crazy, 103.99. 10-year yields fell. How about that? 2.921. That's great. TLT did bid today nearly 2% on bonds. Gold and silver also bid today. Gold up 0.82%. GLD, SLV, which is the ETF for silver, 1.64%. High yield credit took a little bit of a dip today, down 0.60. High credit, high investment yield graded credit, investment grade credit was up today 0.47%. Russell 2000 down 2% today, 1724. Crude oil up 5.84% today, 105.59. Gasoline futures $3.67 a gallon, 3.89%. Gold futures up 0.61, silver 0.63, and crypto continues the bloodbath. 28,345 for futures on Bitcoin, 2,032 for Ethereum. Wow, will it ever end? Well, today was a tough one for me personally. I did have QQQ calls today, trying to get that bounce play. We did not get that. I had to close out for a loss today. Also had some Tesla calls. We had a nice pop this morning. Did not go through. We didn't get that continuation that I expected after the second candle on S&P. Disney reported earnings. Let's go and take a look at it. They reiterated their 2024 forecast for Disney Plus. They see $350 million 3Q profit due to foreign park closures. So you can see now that, let's see what else we got. Where is that exact number? Now, there's two kind of numbers that I'm getting from Disney. So I'm going to go for a couple of different ones. There's two different ones, which is really strange. Disney, second quarter Disney Plus subscribers beat 137.7 million. That's the correct one. And also Disney ESPN Plus, a slight miss. Beyond Meat reported earnings. They beat on the revenue side. They missed on the net revenue side. And fiscal year net guidance was pretty close to in line, but they reaffirmed, but that stock is taking a hit. Here's what I got for Disney. And again, I posted another one because one came from Benzinga, one came from Bloomberg, the other one came from Reuters. So there's like three of them. And Reuters states that their subscriptions beat, but their 19.25 billion in estimate revenue was a miss. But as I look deeper here into some other ones here, it was actually a beat. And the estimate was changed. So $1.08 is a beat, but in here in this estimate is 117. So I don't know if Reuters had their own kind of estimates in terms of Disney, but I can see the stock now starting to fade a little bit as they're having their conference call right now. Rivian also reported earnings, negative $1.43 adjusted versus $1.50 estimate. Revenue 95 million versus 114 million. Fiscal year 22 adjusted EBITDA negative 4.75 billion, capex 2.6 billion, pretty much in line. And fiscal year 22 vehicle production at 25,000 vehicles, adjusted EBITDA negative 1.14 billion, negative 396 million. So not the best of earnings. I mean, there's basically cash burn, and their stock is up. So there you go. But Disney, again, I'm looking at the numbers here. Based on what I see, I guess what the market is seeing, the positive one where we got that bounce, it did beat estimates. But again, $1.08 EPS, seeing some other numbers here, median and entertainment distribution up 9% year over year. Paid subscribers for Disney Plus, I'll go ahead and read that to you as well because I do own Disney. 137.7 million, it did beat. And also paid subscriptions beat, Hulu subscriptions also beat. So again, if you're looking at it in terms of a streaming company, this is way better than a Netflix or anything else out there. If you look in terms of an actual company itself, they also have theme parks. I didn't read anything here that stood out in terms of theme parks. I think I retweeted it. Let me go ahead and make sure. Where is it? Okay, reported parks, experiences, and products revenue of 6.7 billion, up from 3.2 billion in the same year. So I don't see exactly why the stock is taking a hit here. That's pretty interesting. But again, their numbers beat across the board. That's something that I will be looking at here as $100 threshold. It's starting to get very cheap. Tomorrow we'll get a new multiple. Let's see where the PE ratios land in terms of Disney, but that's definitely on my watch list. But in terms of the market action today, yields pulled back, VIX pulled back, and yet the market came just slow meltdown selling is what we're getting. We had a 4,000 level as a pivot. Doesn't mean we can't recapture that, but it still seems that we have that ways to go. So now you're probably thinking to yourself, okay, when are we looking at? And I put 38.25 right there. That's 20%. That's a bear market. That seems to be pretty close to where we should be. Again, we're basing it on the same kind of S&P fall from what we got in 2018. That would match that 2018 bear market of 20%. And then if I remember correctly, the level was 2,300. 2,300 was a signal of a bottom during COVID. Seems to be pretty right if you're just basing it on that numbers. But again, there's so many other factors out there. You just can't kind of just want to catch it either. You just have to see how everything bottoms out. Be okay with kind of giving up a few percentage points, waiting for confirmation, than would just kind of taking a stab in the dark. You don't want to do that either. But levels are important. 38.25 is 20% off the peak to trough all-time high. 36.64 is your 161.8 extension fib. So very key levels. Again, like I said, 4,000 was a level that I was looking for anyways. That gives us about a 17 times multiple based on a 3-year treasury yield. So if you think rates are going to stabilize here, 4,000 seems to be fair value based on the 17x trailing as a PE multiple, not forward, not based on guidance, but trailing, like earnings already made. So I think 4,000, this is where you start nibbling, and I'm starting to make a list here. And I think Disney's pretty much a good one here. I want to deep dive a little more into their earnings and see exactly what's up with Disney. But I'm definitely starting to see a possibility of a way where 38.25 could be where that support might be. Maybe the worst is over. CPI, there were some metrics that CPI was better than expected in terms of certain sectors. Could we be at peak pessimism? 30 is the new 20 in terms of VIX. Now everyone's expecting 4% yields. I mean, have we hit that peak pessimism? Have any friends or family have called you asking about the stock market? Since if you're watching this channel, you're probably really into it and probably have those conversations. Start seeing those tells. How pessimistic are people out there? It doesn't mean that it's a bottom, but it's definitely a marker because that's something that happened in 2020, in 2018, 2011, 2016, 2009, 2008, 2002, 2000, 1999, 1987, 93, 97. That's the last ones that I can remember historically. Anyways, I was born in 85. All right, let's go and answer some questions here. Apple finally dropped under 150. Sheesh. Took forever. Bought my yearly stash dip, even though we'll probably see 130 at some point. Let's see Apple. And Apple is my one holding in my IRA. So mind you, I do have quite a bit of shares. 137.95 on the weekly is your 100-day moving average. I don't think 130 does come. I think 137 is pretty much your low. And right there, yeah, there you go. Big check back. 137.95 would get us back to October. So I think Apple has a little ways to go on the daily, and 137.95 should be a good level. Shoot, I might want to take a look at the 140 puts for possibly next week. Let's see what we get. I have an NQ long at 12.032. Do you think it's worth holding an overnight bounce? I actually did see that close. It closed above 12,000. I would keep the SL on that. Let me see if I can open this up a little bit. I would keep the SL here, not even the weekly. Let's go and take a look at the daily and the 2-year. Then we could start kind of giving some assessments. Yeah, I mean, you do have a little bit of room. Maybe you could put the stop loss at 12.9, 12.910, but you could talk about going down to right about, not even, pretty much right around here, 11,876. That seems to be this little cluster here, this level here. That'll get us back to around November levels, kind of what we talked about with Apple being at October levels. And NASDAQ, 10,713. I put this level on QQQ as well because 285.40. Now it gets interesting. That's a 30% peak to trough. Same number that we had in 2018. Interesting. Trulieve took a massive dump. What do you think about the next 5 to 10 years? Well, I am a Trulieve customer personally. So again, I like to invest in companies that I personally partake in. So again, I think Trulieve is great. I still own shares. There are literally two of them near me. Oh, actually, one and like three of them or four of them in Orlando. So I like Truly personally. I want to own it because I want to own things that I actually like and actually, uh, what do I say? Do business with, of course. So again, but everyone's different. I mean, pot stocks took a hit. Those are speculative names. I mean, that's part of it. EV, crypto, cannabis stocks, payment processors, anything online, Zoom. It's all kind of been kind of put together, guys, because we have a liquidity drain. That's why you're not getting a lot of volume in the market right now. Just not a lot of cash out there to be used or to be deployed just yet. A lot of people sitting on cash. Lots of people ask me this week, yeah, that's usually kind of that signal. That's when you start seeing the nightly news talk about the stock market, start listening, because that's when people start really panicking, and usually, historically speaking, give some great opportunities if you know what you're doing. What do you think of AMD holding up today? Well, I do love AMD. It was down 1% today. It was higher. I do own shares, of course. AMD will always have a place in my heart, obviously, but AMD can get down to 72.30. Again, that QQQ level, guys, that's big. Remember, AMD is part of that. So 285.40 would probably get you to AMD at 72.30. If we bring up the semiconductor index, you could see just ugliness until we get this wick here. Big time support, 216.31 right here on the daily. Let's go and bring up the weekly. Sounds about right. Yeah, 216.31. Pretty key level. We retested those levels in April of last year. We retested, bounced, retested, and then kind of soared. The only issue here, guys, on the weekly on SMH, you got that beautiful head and shoulders. So again, we could be getting some more, possibly get down to 176. So I wouldn't be rushing to buy the dip yet. Remember, kind of give yourself a little bit of cushion. You don't have to be first to profit. But you do have to be right eventually. You have to be right. So again, but you don't have to be first. You don't have to be the first one in there. Again, if others get in there and they want to put their toes in, that's fine. You could be patient and wait for at least some kind of continuation where things are getting a little more positive. Again, if we can get some positivity in terms of a ceasefire in Ukraine with the Russia stuff, if China lockdowns can stop in terms of COVID, if they can get that under control, if inflation today, obviously, we know what we got with CPI. That's not going to happen anytime soon. Some positive news. We get one more CPI report prior to the next FOMC in June. So at least we'll get one more crack at a CPI beating expectations and actually freaking lowering, right? That's one can only hope. But until then, really all you're doing at the end of the day is really just looking for opportunities where if you see a pop, you're probably much trying to ride it up, and you see a drop, you're trying to ride it down, or you're trying to play resistance and support here. Tough one, tough trekking today. I definitely am tomorrow wanting to look for opportunities, possibly for next week, since we got that CPI number down. Now we're going to get a PPI number. Now I got some data to work with and see how the market responds with earnings. The earnings market. The earnings reports, kind of the cycle kind of ending. Now we're starting to see how we can price things, how the market can price things based on EPS. Again, 3% yield, a 4,000 S&P gets you to around 17 times forward multiple, which is about an average multiple in a market. Now, granted, remember, we talked about yesterday, it's all about the grand repricing. We talked about today, the big repricing in the morning, where how do we price these stocks based on a higher rate environment and a higher inflationary environment? That's really it. We either need supply to really flood the market, and I don't think any kind of warehouse a manager right now wants to be sitting on a ton of inventory either. So again, you kind of have that push pull. Demand is high, but at the end of the day, do you want to add more supply? And if that's the case, what if you don't get that demand? You cause imbalance, prices sharply drop, and that's not good for anybody. So again, purchasing manager index, those PMIs, guys, are super important. We'll probably get some next week, I believe, or the week after. Those manufacturing PMIs, those services PMIs are absolutely important. As long as you stay above 50, that's an expansion. Those are good signs for an economy. But again, we need something to hang our hat on. And right now, the market is searching for something. Do you think the market is making any excuse to break down? I think the market and traders, investors, are what it is right now, people are on a liquidity crunch, meaning as prices go higher, inflation is higher, people are going to start looking to investments to cash out, whether it's their winners like NVIDIA or AMD, or it's crypto like the other names that are out there, Ethereum or Bitcoin. People are going to start selling those assets. At the end of the day, guys, it's still just money. I mean, crypto, I haven't really bought anything with crypto in terms of using it at a point of sale. But again, people need to raise cash. And, writing was on the wall for a little bit in terms of an IPO. We had an IPO craziness. I remember on Investment Club, I had a question regarding Lemonade, the insurer. And I remember I got an email from, what was it, Motley Fool. They sent out emails and saying, this is our hardcore, for sure, 100% stock to ride with. And it was Lemonade. And again, nothing against their research, but Lemonade is an insurer, online insurer. And I said to the investment club, why would we want that? I mean, Allstate does that. New York Life does that. Geico, you could buy Berkshire Hathaway instead of buying Lemonade. I just never saw the point. I understand it's like automated underwriting and stuff like that. But even that, those kind of float of IPOs, it looks like a liquidity drain. And how do you kill inflation? By removing liquidity, by removing money supply. And that's what we're going through right now. So the massive repricing of the market, we need to see how we can price companies like Apple and Tesla and Disney and SoFi and XOM in a rising rate environment. And again, earnings multiples are not exactly gangbusters either. Again, you're either killing it or you're kind of fumbling the ball at the end of the day in this market. Not everyone is Apple. They had an amazing quarter. Obviously, not everyone's Microsoft. We saw that with Netflix. There is some companies out there that are struggling to get by in terms of kind of getting those multiples to be justified by investors. At this rate, you're not going to want to invest in these small cap or these aggressive growth stocks when money is so scarce. You just won't do it. At the end of the day, you don't know how much inflation is going to eat your gains, and then you're taking all the risk in equity. For that, you could just put the money in a treasury, gaining 2%, and you don't have to worry about it. You're going to get 2% and pretty much a guarantee on your money back. That's better than being, down 27% on a Coinbase in a day after earnings. You start getting the repricing, starting to see bonds starting to get picked up. That's where you are. I think dividends are a great way to go. I think there's some value companies that still have value, some energy names. I'm waiting for a little more of a pullback. I think Berkshire is great. I think SPY-D is great. I think UNH is great. I think Microsoft is still great. I think Apple is still fine. But again, as things come down, it's going to drag the broader market with you. That's just how it goes. Everything's in sectors, and you have boom, and you have these cycles up and down, all controlled by the Fed based on liquidity. The real problem is that, historically speaking, rates are not even that freaking high if you think about it. That's really the scary thing, that we're so addicted to the cheap money in this economy that we've had kind of started this path since 2008 where it's just injection of liquidity. Like the market is not allowed to fall. The market is not allowed to be repriced. So again, it's been constantly happening like that, making recessions, making stock market drops way more sharp. Again, kind of go back to pre-2006, 2005. The market didn't have three-digit stock swings. We didn't have stock swings of 1%, 2% in a day. That was not normal. As things changed, deregulation happened, of course, and then, of course, more access to the market in terms of internet stock trading. That's changed. So it's a different game now. It's a different market. So you get a lot more sharp swings up and down. So again, as an investor, what is one to do? If you're a type of person that is just, I cannot handle this kind of stuff, you just buy an index fund and you don't think about it and you move on. You just bet on America, and usually pretty much every time since the turn of the century, the 1900s, you've been correct. Thinking of a 3,600 bottom? No, not on S&P. If I had to look and reprice a bottom, which I did on SPY, I have those levels instead. My level is 382.80. That's a 20% bear market, plus or minus 1% or something, or 0.5%. I don't think to the T it just starts bouncing. Obviously not. But let's see what futures does. But keep in mind, guys, futures, I wouldn't worry too much today unless you are trading futures overnight. The really most important thing is PPI tomorrow at 8:30. We get another crack at it with CPI today missing, and now we have PPI tomorrow. Maybe we get some positive news. We get ignition back to 4,000 S&P, 400 SPY. Seems to be that kind of level that the market wants, or what I call the pivot point. Have a great rest of your afternoon. We'll catch you guys later or tomorrow for the morning note. Cheers. Yes.